Hello, traders. Cousin Vinny coming to you from theclosingprint.com, June 18th, 2023. In this week's video, we'll cover the markets which are a bit extended and potentially ready to pull back in the short term.
There you go.
S&P 500 reached the 4,400 level, extended to 4,450. That proved to be resistance, with markets extended after triple witching OPEX on Friday. Dealers will now be able to reset and rehedge. We saw quite a bit of call buying last week, further out in time versus 0-day. So that's telling us to look at this level as resistance for now. The call wall did shift up, but showed signs of exhaustion or a pause to end the week. From the October 13th reversal low, we're up about 27%. Cautious to start trading on Tuesday and looking for opportunities going forward. Growth stocks and the New York FANG index showed signs of a little profit taking to end the week, with a potential for a pullback towards the 9 EMA or the 21-day. RSI is still showing muscle, so there is a possibility we bounce. Again, a reason to be a bit more cautious to start on Tuesday. We have MACD flattening out and stochastics embedded, so that can stay like that for a bit longer. For the time being, this chart is neutral and trending. Small caps took a pause, so there is a possibility this pulls back a little bit towards this breakout zone or continues higher up to that 197, 198 level. We'll be watching small caps in particular to start Tuesday trading, while at the same time we'll watch for the Dow Industrials, in particular the Dow Composite, to continue this trend higher. These 65 stocks constitute Dow theory, with the Dow pretty much in a range, looking for any signs that we might pull back briefly before setting up another leg higher, should breadth continue to improve. With the latter showing improvement last week, pushing a bit higher highs and higher lows in the S&P 500, the mid caps, small caps, and the NASDAQ reaching the plus 30%. So that's another reason that we might see some profit taking, an area where we normally would take a little bit off as we reach this plus 30% level, while at the same time keeping an eye on the New York Stock Exchange, 2,700 stocks. NYMO continues this path higher. That's telling you there is a better chance that breadth will continue to improve rather than peak and turn. If we start to see a peak this week, that would be a lower high. I'm looking at the black lines. You can also see in the background the gray making lower highs as we continue into the end of June with that JP Morgan collar that will roll out on the 30th. And given that we are a bit extended, especially in tech, as we know, tech has performed very well since the October-November lows and continues pushing higher, with the expectation that we could see more follow-through, whether it's AI or other improvements in tech. We do know that the month of July brings a seasonality spike in the month of July, so that's only a few weeks away. Something to consider if you're buying tech stocks or you're looking for a better opportunity on a pullback. On this recent run-up, maybe we pull back to the 9 and 21 day, something we're watching for. Note the volume. So institutions have been buying, looking for a follow-through, but I am looking for a better opportunity, potentially to buy on a pullback, especially considering that New York FANG index presented here, there is a possibility we pull back. So we got to wait for price action to confirm before we do anything. But the month of July is seasonally the most strong month of the year and something to look forward to. Of course, the one caveat that we did see for this week is that VIX is at multi-year lows, not seen since 2021. There is a possibility we could spike higher, or we could just stay down here and frustrate volatility sellers further, or we could see some mean reversion back into the upper teens over the next couple of weeks. Regardless, we will be watching the markets. We do have 14 bullish indicators for the week. 4 are neutral and 2 are bearish, one being the VIX and the other being OPEX, where dealers will now have a chance to re-hedge, and the other being resistance at the call wall overhead at 44.25, 44.50, which we were rejected at on Friday. Additionally, growth and value are both extended in the lower panels, with growth and value both showing signs that we could see a little mean reversion back towards the 21 EMA, while looking for tech to perform in the month of July. One caveat for the bears out there is the US dollar. If this continues to fade back to the bottom of this range that we've seen since the beginning of the year, that would be bullish for equities and for international markets, with the 10-year moving sideways over the last several weeks above its moving averages. So if we were to see this drop and make a lower high and start to head down towards the lower part of this range, that would be a bullish tailwind for equities. For the time being, pretty much neutral. So keep an eye on the 10-year and the US dollar going forward. Referring to the sectors, we can see that most sectors are above their 20 and 50-day moving averages, the blue and red lines respectively, with the exception of consumer staples and utilities. These are both defensive sectors. We see retail and XLY, consumer discretionary. If you're bullish equities, you want to see these two sectors moving higher. And you want to see consumer discretionary XLY outperforming consumer staples in this chart. We're starting to see a crossover. So that's telling you all during the bear market, as institutions were positioned defensively, that is starting to change. And we're seeing these moving averages start to turn up and to the right. That's not my opinion. That's what's happening at the present time. So that's looking more bullish as well, with consumer discretionary clearly outperforming in the top right quadrant, leading sector. Industrials looking very strong. We can see materials are improving in the top left quadrant, with all these other sectors trailing and starting to move higher as well, with tech and communications sectors weakening a bit. For the week ahead, we're looking for these stocks to perform. Some of them will probably pull back a little bit before continuing on. Most of them are trending. I like the ones in particular that have been noted with an asterisk, like SYM. Symbotic, which is seeing intensive volume as the company using its AI-powered robotics and software platform to improve the supply chain from end to end, and obviously showing institutional interest as the volume picks up. MACD's above its signal line, stochastics embedded, and RSI showing muscle. So in best case scenario, some of these will give us a little pullback, say to the 46, the 9 EMA or so for an entry, but it is trending. It's not in a range, something I've been looking forward to. Additional stocks like YPF in the oil and gas sector breaking out of a sideways range on Thursday, Friday. Volume picked up markedly. MACD's above its signal line, stochastics turned up, and RSI showing muscle. I'm looking for a flag for a better entry, but it should continue higher this week. With revenue growing 16.6% year over year, the company reports again in August. Pampa Energia showed earnings in its most recent quarter of $2.56 versus an estimate of half of that, $1.15 per share. So this looks like it might continue higher. It does trade low volume. I like to see at least 200, 300,000 shares. On average, it looks like it trades about 100,000 shares. So that warrants a little bit of caution. Other than that, though, looking for other stocks in the industry, oil and gas, exploration and production, and oil and gas equipment. We'll be looking for some follow through this week for potential trades. Additional stocks from the IBD 50, AAON, sitting right on top the 50-day. Looks like this leg will push higher towards that 100 level, potentially this week. ASML sitting right on the 21-day. A lot of the chips might see some follow through, or they might see some consolidation of the recent gains. So we'll be watching for confirmation. We won't just take a trade just because it's mentioned. Look for follow through on above average volume. ACLS drifting back to the 21-day. Amphastar from the previous watch list, looking for that to follow through. Nice volume on Thursday and Friday. It broke out above 47.50, meeting some of our targets. Braze, a new stock on the IBD 50, BRZE, a nice ascending flag. We have stochastics embedded in most cases, so best case scenario would be stochastics oversold and turning and a push higher. So that tells us to be a little bit cautious, but still looking for some of these stocks to follow through this week, like Confluent right at the 21-day and Double Verify in the security space. That's been seeing a lot of activity of late, with Palo Alto Networks being added to the S&P 500. Celsius trending along its rising and bullish 21-day moving averages. Globe, GLBE, also making higher highs and higher lows. Remember, retail has been showing life, so Lulu, looking for that to break out. Nike also looked pretty good, not on this list, but travel and leisure stocks continue. Ryanair, right at the 21-day, looking for a push higher. Royal Caribbean trending, consolidating in the last week. Shockwave threatening a potential breakout if healthcare can see a follow through. CRM, Salesforce, moving sideways, looking for a resolution in this consolidation, whether we move higher above the 21-day or move back to the 50-day. Stochastics is oversold, looking for that to turn up. In addition to Uber and United Airlines, both of these rising, moving away from the 21-day moving average. Uber has been discussed a lot lately on CNBC and Bloomberg. Watch for this to follow through, taking market share and dominating its industry group. Zscaler also watching for a re-entry on this one on any pullback to the 21-day or the 90-day. Keep an eye on that one this week. Additional stocks picked up on a scan, with stochastics oversold and turning higher. Arch Capital, looking for a follow through. ACGL, if it pushes back above the 21-day and 50-day this week. There's Pampa Energy again, showing up on the list. Stochastics turning, volume picking up. Stocks showing relative strength at 52-week highs. Many of these continue to thrust higher. Adobe with earnings out of the way. Amphastar again, high volume. The only issue I have is that stochastics is embedded, and we could see a little flag or consolidation before these follow through. Generally, most stocks are higher on the week and a bit extended, so we're going to be a bit cautious going into tomorrow trading. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for Monday, the 19th of June. I'll send out a watch list later tonight, around 12 midnight on the East Coast, around 9 o'clock on the West Coast. The best stocks that we look forward to going forward while considering the current market environment. So enjoy the rest of your weekend. Take care, and I'll see you in the morning. Ciao.